Would an installment contract with the deed held in escrow allow for a seller of a primary home to receive the primary residence capital gain exclusion? As long as there is a transfer of deed, so the actual equity in the property was transferred between the seller and the buyer, that seller is now entitled to their Section 121 exclusion. So that rule is if you have a primary home that you've lived in for 2 out of the last 5 years, you get a Section 121 exclusion. Basically where if you're single, it's 250 grand. If you're married, it's 500 grand. If I buy a primary residence for $500,000 and 10 years later sell it for $750,000 and I'm married, I ideally would have a $250,000 gain. I sold it for $750, I bought it for $500, but because I've lived in it 2 out of the previous 5 years, I get a Section 121, therefore not making me pay tax on that gain. So in regards to this and the deed transfer, as long as the equity in the property has transferred and the deed has now titled into someone else other than the seller, they would be entitled to that Section 121 gain. So the next question, would the buyer receive the benefit of the cost seg and bonus depreciation? Overall, yes. So the same thing goes just for the flip side. As long as the buyer has now the equitable ownership in the property, then they are able to take depreciation on the property, even if part of the property is held up in escrow with some sort of buyback term or clause.